for people that are close to retirement, that maybe haven't built up enough of a nest egg yet, do you have any words of wisdom for people in that situation?
There are two ways of building wealth. One, to save more rather than spending, and then make those savings investment into assets that are going to have reasonably high returns. So if you can save more and you have not yet retired, please do so. It's never too late. And usually you want to have a diversified portfolio of many assets. You cannot be overweight anywhere. But, if you're originally still 10 years, I would say new economy firms and technology firms are going to do better. The same way in which the Nasdaq for the last 30 years has done better than the S&P 500. So tech-related stuff in the industries and firms of the future would be the biggest upside. And you can use the Mag 7 or a broader range of technology firms as a proxy, because they're going to invest into all the firms that are in the private sector if you don't have access to private markets. I would stay away from long duration fixed income, because in a world of even inflation at 5% rather than 2%, that I don't think is totally unlikely, 10-year bond yields go from the current 4 to 8. So you're going to lose 40% on the unquote safe defensive asset. Therefore, stuff that really hedges you against inflation, like short-term treasury, tips, gold, ag, and other industrial metals, and some sustainable real estate might be the good hedge against that. In the 60-40 portfolio, the 40 that goes to long duration treasury is a bad idea in this world where you could have higher inflation. You need to find a different defensive asset. So quality risky assets in the industry of the future and a better defensive asset. I think those are the advice I would give to investors.
Yes. Now, we've spoken about gold, we've spoken about the Mag 7, AI, the explosion in growth over the next 5 years or so. They're the areas that people should be looking to invest in, but what are some areas they should avoid that you think would have a large price drop over the next few years?
Many people want to make a quick buck. By doing quick buck, they do day trading. You lose money. For one brilliant success story, there are many people who lose money. Plus, you have to pay transaction costs and taxes if you trade all the time. Many people go into the gimmicky stuff, the meme stock, the SPACs bubble, all the crypto shit coins and things of that sort. I would stay away from all that stuff. You want to be in a diversified portfolio of good assets, and you want also to avoid the dinosaurs, the firms of the past that are not able to adapt to new technology and are going to disappear. As I said, many firms in Dow Jones and S&P 500 are not going to survive. Either they adapt to new technology or going to disappear. Take the example of GE. It was a multinational conglomerate, looked like a superstar, and essentially fallen apart because they made mistakes. So many firms are going to disappear. Of course, the S&P can do well because when a firm becomes a dodo, in extension, they drop it out of the index and they put the new Nvidia of the world, right? So, but still, you have to worry about exposure to firms that are going to do very poorly, that are those of the past, rather than the firms of the future.
What are the biggest mistakes that people are making regarding money, regarding finance, investing?
It is, investing into stuff that is very speculative and volatile, doing too much trading as opposed to buy and hold, not being enough diversified across classes and globally. Take an index passive of global US and global equities and of other assets, buy and hold it and save into it every month of your life. I've never bought and sold in my entire life a single security. Just buy passive indices, diversified. And listen, on the S&P for the last 30 years, I've gotten a 12% return on average per year with all the booms and busts. Hard to beat that. Even one of the most sophisticated hedge funds, after fees to 20, to get a net of 12, you're lucky. Is the exception rather than the rule. If you're not a sophisticated investor, don't be an active trader. Just buy and hold in a diversified portfolio. Probably you want to be overweight US because US is going to be the dominant economic and technological power of the future. I still do believe in the American exception. So it's as simple as that. Not rocket science.